Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Servus Capital Management.
Hey, good morning. This is Alan Molina, your host of Purpose Driven Finances, president of Servus Capital Management. Oh, what a day, what a day, what a day. I heard it's going to get over 80 in Central Virginia. Great day. Great day to go fishing, hiking. Don't use that four-letter word called lawn. Just focus on your family. Focus on getting some vitamin D out there in the sun. Sitting here with my favorite co-host, my friend, Rich Roth. How you doing, my friend?
Good morning, Alan. How are you?
Hey, doing great. I know you. Have you started working outside? Because you're more of a beast of it than I am.
Yeah, I have. Going to spend a little time with my oldest son today, going up to see him at school, and they have a big lacrosse game against Lynchburg College. So I'm driving 4 hours.
Oh, that's great.
To see Lynchburg College play.
That's nice. That's fun. That's fun times. Fun times. Today I get to. I think I'm gonna I can't postpone the tournament, but I'm gonna skip this tournament today and move it to 2 weeks. My oldest son is coming over, and we're going to weld my table base.
Oh, cool.
Because my little kitchenette's coming together, and built a little river table with some epoxy, and, so we'll see. We'll see what happens. It should look good. But, Rich, I know you were highly disappointed that we're not talking about home warranties today, but it's coming. And my goal was to try to get this company that is my favorite from everybody I'm looking at. But the first thing I'm going to do is my current provider. I'm going to do some quick. I'm going to say I need you to work on this, and this, and this, and this, and then I'm going to switch. Because I've been paying them.
Yeah.
Why not? It's things that legitimately need to be done.
Mm-hmm.
And
but here's the question, Alan: if the new company's better, might it not make more sense to wait 30 days and switch now?
Well, I don't like if I've been paying for this company for the past year and a half, and the plumber they brought out dropped the ball, so
they need to finish their job.
They need to finish their job.
Gotcha.
What's really, really weird is we have 3 toilets in the house. I know everybody wants to hear this. They cracked. They're still workable. They do what they're supposed to do, but there's cracks in them. I've never seen a toilet crack. And this week I got a new client. He's a plumber. Hello out there. I know you're listening. I appreciate you doing that. And he told me, he said, yeah, the American standards that you get, he can't stand them because they're second quality. And all of them that have cracked are American standard. And I'm like, come on, man. Come on. So it's rather frustrating. My wife even noticed that it's cracked and it goes around the bowl.
Oh, wow. So,
don't want to sit on them and, that would be an unpleasant experience if it fell apart. I'm going to ratchet stretch them, pull out the redneck in Alan.
We have one in the basement that's it's got a wooden seat to kind of go with a theme.
Oh, that's so nice.
But there's a crack right in the front middle part of the seat.
Yeah. Oh, that hurts.
Oh, yeah, it does.
Yeah. Bro, you need to get that fixed.
I just avoid that. That's just for guests.
Yeah.
That's to make sure guests don't stay very long.
Right. Yes. Talk about, that's some issues there, bro. Yeah, it sounds like a personal problem.
Yeah, it pinches you in all the wrong places.
Isn't that a song?
I don't know.
It's isn't it Kenny Rogers?
I was going to say, it's got to be a country song if it is.
No, that's looking for love in all the wrong places.
Oh, yeah.
Yeah. But it says pinching me in all the wrong places. They could sing it the exact same way. Now, folks, please don't hang up. Don't cancel me. Just trying to have some fun and to lighten the mood, because Monday is going to be the last day of March. And aren't you going to be glad? And because Friday, the S&P 500 was down 2%. That's what you call...
That's a big drop.
That a big drop in one day. However, I got some new clients during the week. And I told the new client that, that we needed to sell their stuff that's at the other firm. And they said, well, Alan, isn't it a great time to buy once the market has dropped? And I said, yes, but here's an analogy. If you're in your kitchen, put a knife on the countertop and push it off the edge. when do you want to catch it? A quarter of the way down, half the way down, or almost at the floor? When do you want to catch that knife? How about you, Rich?
I really would prefer not to catch it.
Exactly. You want to let it hit the ground. Is that inertia?
Sure.
I don't know what it is. I think whatever the movement is, you want it to stop.
Yeah.
Totally stop, and then pick up the knife.
Inertia, nice.
I
feel like I'm back in high school.
Hey, what's going to happen? Some physics teachers are going to text me this week or this weekend or email me and say, Alan, that's not inertia, it's momentum or whatever.
Isn't inertia like a body in motion stays in motion?
Until something stops it.
Yeah.
Yeah, so it's a floor. So
a floor would do it.
A floor would do it, hopefully. So, and I expressed to the new client that, hey, the pull down, the market going down yesterday and really for all of March is just the beginning, because Besant has said, and I've expressed it on this radio show, I've expressed it in meetings, that they want to detox our American economy from being so dependent on the U.S. government. And they need to go through, and I think they have $8 trillion worth of U.S. debt that they need to issue or refinance, and they want lower interest rates. And the only way they do this is they go and fix things, but it's going to cause temporary pain. So, folks, I'm expecting, and you can call me out if I'm wrong, because I'm not managing a portfolio according to this, but I would not be surprised if Rich and I are talking at sometime in 2025 or early 26, we're talking and the indexes are 30 to 35% from their high. It's not a call. It's just, it's on my radar down the road. I don't manage my client portfolios accordingly. I just communicate that we're entering tornado season and you just need to be prepared. So, Rich, what I thought we would do is talk about portfolios. And folks, we are, if it depends on what happens, and we're going to talk about what's going to happen on Wednesday, but it depends on what is the economic happenings this next week is what next week's show is going to be. Next week's show may be talking about tariffs and how to deal with your portfolio, or that everything is back to where we should be, or not should be, but where we want to be. And we'll go over that and talk about it. But beforehand, what I want to do is, Rich, there's a question. Or something I told people to do. And I'm wondering how many people did it this week. You want to let them, you want to ask them?
Ladies and gentlemen, did you sell the rip?
Exactly. What I mean by the rip is the market hit the bottom about 2 weeks ago and then came back up. And I told you, when the market bounces up, go ahead and sell it. Did you do that? Because what ended up happening is dynamic asset allocation, I'm thinking Monday or Tuesday, it started going down and I sold. To give you an example, I took, let's say, a 50% stock, 50% bond portfolio, and we moved it to about 20% stock. That's a dramatic reduction. And not only did we reduce the risk, but also we changed the makeup of it. There is a ETF that as the market goes down, it actually goes up. It doesn't short the market. What it does is it's called anti-beta. It does extremely well. Also, there's something called low volatility. You can invest in funds that have a low volatility quotient. And then there's also gold and silver and things such as that. But it was ugly on Friday. And then the QPM, we were long and we got out. We went to cash for a couple of days and then we legged into being short. And we had a great day on Thursday. And it was not a great day. It was an okay day, but a really, really good day on Friday. So what I wanted to do, Rich, is I wanted to remind clients how we manage money.
Okay, so I'm going to get you to elaborate on that a little bit, if you don't mind.
I like it.
And I know this is kind of where you're going with how you manage money.
Right.
But you said at the very beginning on Friday the S&P was down 2%.
Right.
That's a big, big drop.
It is.
And then you just said it was a very, very good day for you.
Right.
Explain.
Well, the way I manage money is that my first thing is try to avoid the significant drawdowns. And I'm not talking about the one day off thing, to where like the president falls up the steps and people laugh and they're concerned about his health. I'm not that. I'm talking about a longer drawdown where the economy is slowing and inflation is they're going up or down. And in those times, your portfolio can be significantly lowered. I mean, just if you want to have some to look at things, I don't know, I'm stuttering. Look at NVIDIA, look at Amazon, look at Apple, look at Microsoft. Look at those stocks and see how much they're down. And so, Rich, what I did was I printed a chart for you, and I printed a chart for me. And it's called the starting point. And if you miss the worst 10 days in each decade, and even the worst 10 best days, you significantly outperform the market. And so I told clients, I said, once the market goes up, we're going to sell and go very conservative. We probably won't change that unless something really, really radically happens and the economy and what Trump wants to do totally changes. And I hope it doesn't happen because...
Now, is this in dynamic asset allocation that you're going very conservative or
Yes.
in the QPM?
Dynamic asset allocation.
Okay.
The QPM, as of Friday, we were short the Dow, the NASDAQ, S&P 500, mid cap, small cap, Europe, China, Bitcoin, Ethereum, and
Let me interrupt for just a second because you said you're short all those things. Right. And we're not mocking my size here. But for folks who don't know.
But you got the guns, bro. You got the guns.
Being short the market or being short those sectors means
right.
What?
It means that as the market goes down, we make money.
Because you're almost, and I hate to use this word, but you're almost betting against it.
Well, yeah.
Right? So you're selling it short, right? So that means,
right.
If it goes down, you make money.
Right. And what the signal, because I have a very detailed process that it tells me what to do. And like Wednesday, it told me to go to cash. Tuesday, Wednesday, Thursday, it said go to cash. Thursday, it started telling me to go short. Friday, it really said to go short in the morning. And so what happens is we buy ETFs, exchange-traded funds that are inverse. Now we're really getting into the weeds. But what this means is if an inverse is its opposite of what normally happens. If the S&P 500 goes up, the inverse goes down. But if the S&P 500 goes down, the inverse goes up. And so it's a very cheap and easy way in order to take advantage of the sine curve when it goes down. Rich, do you like the ocean?
Who doesn't?
Oh, some people don't.
Okay.
I like the ocean too. I like mountains. I like the ocean. But those waves, have you ever done surfing or bodyboarding?
Yeah.
Okay. You try to ride a wave when it's at its top and you ride it in. A sine curve is the up wave and the down wave and back up, the full sine movement. The stock market is the exact same thing. And so in our signaling process, it tells us, hey, the market is starting to go down. Either get out or go short. Sadly, we lost a client this past week. I'm a financial advisor, I'll tell people. And I called him. I said, listen, you left at the wrong time and your portfolio is going to get killed. And it's just, he wanted greener pastures, and that's fine. I know it's strange. Everything's supposed to be hunky-dory and perfection. But, sometimes people don't want things, and that's fine. But I called and warned them. I said, listen, you need to protect your portfolio because the signals are saying get out. And part of the issue is the past 4 months have been rather frustrating. And it's been a sideways market until March. The dam's kind of broken. And so you need to have patience through the entire process. Now, folks, Rich is looking around. He's like, hey, it's almost time. I want to remind folks that you've got to have a process. And the process, you have to be patient in the process through the entire time. So, folks, we're going to go to a minute break. Give me a call, 434-316-0246, and stick around, and we're going to talk about financial planning through a downturn.
Hi, I'm Vince Colonnese, host of The Vince Show and Vince Podcast. It's a show with an obsessive focus on what's good for America. I'll give you the truth beneath the headlines of all of the nation's top stories, and I'll bring attention to the stories the legacy media want you to ignore. We feature newsmaking interviews with the top guests on the planet. I'll ask the questions you can only dream of other interviewers asking. And of course, I'll take your calls from sea to shining sea. The Vince Show and Vince Podcast.
Weekdays from noon to 3 on WLNI.
This is Chainsaw Talk with Tommy, the Woodsman. Do ladders and tree work mix? A quick internet search will give you the answer. Ladies, if you see your man carrying a ladder and a chainsaw towards your tree, just go ahead and dial 911. There is a reason professional tree companies don't use ladders. When the tips of the branch hit the ground first, they will compress, creating a spring. Unfortunately, this energy is redirected back towards the cut end of the branch and can take the ladder right out from under him. Stick around for more great tips from Tommy, the Woodsman. I have a saw for that.com.
And now, back to Purpose-Driven Finances. Here's Alan Molina with Servus Capital Management.
Hey, good morning. This is Alan Molina again, your host of Purpose-Driven Finances, the guy who is real. I just shoot straight, folks. And so after the break, hey, if you need some tree work, call my friend Tommy. He doesn't pay me. He's just a good friend of mine. And he's a great guy. But Rich, what I want to do is I want to talk about financial planning around a market drawdown. A lot of times advisors, when they start dealing with this kind of stuff, what ends up happening is they run for the hills, they hide, they play golf. They say, hey, don't worry, it'll come back. You know, you call them and it's, you know, you don't get a call back. You know, I'm not saying that I do everything perfectly, but I try to have a process that is deep and refined and actually takes advantage of things. And so, folks, the first thing, Rich, you know, thoughts and prayers go out. I don't know if you saw it, but the earthquakes in Myanmar.
Yeah.
Dude, I saw a crane was like 30 feet up, and it threw the guy out of the crane. Horrible. Then I also heard there's a volcano brewing in Washington State. You know, so thoughts and prayers to those folks. Hopefully it's not too bad. But Rich, April 2nd, it's called Liberation Day. Trump has called it Liberation Day. He purposely did not make it April 1st because he didn't want April Fool's Day. But what he's going to be doing is setting tariffs. And we could do multiple shows about it. And there is a book, No Trade is Free by Bob Lighthizer. Great book that details trade. And folks, don't cancel them or get mad at me. But frankly, the Clinton administration and the Bush administration totally messed over America with what they did with the trading. It was horrible, looking at the history of things. And that being said, people are like, why is Trump doing this? Rich, I'm going to give you some statistics between 2000 and 2016. And this is when, you know, if you remember in 2000, they started really trying to do the World Trade Organization and all kinds of other things. Since in that 16 years, the U.S. lost 5 million manufacturing jobs. And it was mainly people who lack a college education. Deaths from cirrhosis of the liver increased by 50% from 99 to 2013. Suicides increased by 78%, and drug and alcohol overdoses increased by 323%. And some people will say that's just because it became available. It was the internet or whatever. But it's interesting that it happened the exact same time when families lost their jobs, their manufacturing jobs. And a lot of times people will say, manufacturing, that's dirty. We don't want to see the steel plants. We don't want to see the window manufacturing. It's dirty. We don't like it. And they say, hey, just go get a computer programming job. I don't know about your sons, but not everybody wants to go become a computer programmer. No, not everybody wants to go become a service, worker where they answer a telephone.
I think there are a lot of gigs out there, right? Where, and maybe a lot of them are, and you mentioned Tommy the Woodsman before, but people who just love being outdoors and cutting grass or, landscaping or whatever the case might be. I mean, different strokes for different folks, right?
Right. But what's happened is those folks who work with their hands and get dirty, it's almost like their job is second class, and it's wrong. Because if your toilet is clogged, you're going to call an IT specialist?
Well, and I think there's a big, for those professional services, you mentioned plumbers, electricians, heating and air guys. I mean, there's so much opportunity for people who want to get into those fields now.
Right, exactly. I have two, I'm not going to go there. That's it, getting too close to client confidentiality. But I have clients who work in dirty jobs. They make big bucks.
Yeah.
And their net worth is significant because they do what they love and they're good at it. And what America has, and it started after World War II. I don't want to go into a tariff thing, but it is astounding. And Rich, I printed you a sheet.
I see it.
And, people say tariffs are so high. Look at where the average tariffs are it ultimately ends in 2016. It's like 7 or 8%, if that.
Well, and not only that, relative to the chart, which goes back to the 1800s,
right?
They're at all-time lows.
Exactly. And did you know that in the 1800s is where we really started the Industrial Revolution? We had some of the highest tariffs, but a country that manufactures its goods can be a leader. But if you don't manufacture your goods, guess who you become? Africa. Because Africa has to buy everything. They manufacture nothing. And I'm not dogging at people in Africa. I've been to Africa. I love Africa. I love the African people. But what ends up happening is if you don't have the infrastructure, if you don't have the jobs, you become Africa. And it's sad. And America has the resources, has the talent, has, my wife doesn't like this word, stick-to-itiveness.
Well, it's because it's not a word.
Oh, it is? Google it, bro. It's a word.
It's a real word?
Stick-to-itiveness. Yes, it's in the Merriam-Webster's dictionary. It's amazing, isn't it? But look at what we can do. And so what Trump is doing, and so when he's going to announce the tariffs, there's 3 E's that are going to happen. They're going to be explicit, extensive, and enforced. And the economy is slowing. And one thing that's interesting is right now people are saying, there's a concern that there's a recession. If you look at your portfolio, you would probably say, are we in a recession? But the forecast for the next quarter of GDP is 0.02%. That's not very good.
Right.
Not very good. We're not talking 0.2, we're talking 0.02. So there is not very much margin. If it was the Biden economy, they'd just goose it, send some more money to USAID, a great thing to do. So the tariffs coming up on Wednesday are going to be explicit, extensive, and enforced. And
are they?
Well, I'm hearing 25%.
Well, and I guess the reason I ask that is because you look at Canada and Mexico, where he threatened them, and then they said, no, we'll do what you say, and then it backed off. So I guess they worked, right?
Right.
But I'm just wondering, are we actually going to go through with them?
I hope so.
Or are they threats?
I hope so.
You hope so.
The reason being is there has to be, the more and more I go down the rabbit hole of tariffs, but really trade, our politicians sold us out to China. China is and was a communist government, but we gave them all this money in order to help them achieve their purpose and plan. We funded all their aggression towards us. It's utterly ridiculous. And our politicians said, let's make it free trade, but it wasn't really free trade. What they made it was trade that countries can manipulate. The currency, they can manipulate taxes. They can cry foul. America changed our laws in order to meet the World Trade Organization, but it hasn't really enforced for us. So it's just not a good thing. Now the tariffs are going to be reciprocal. And you say, what does reciprocal mean? Reciprocal tariffs are designed to match the import duties placed on U.S. goods and services by other nations, as well as compensate for other trade barriers. I'll give you an example. China consistently and routinely lessens its value of its currency in order to affect its trade with the United States. That's one way to do it. Another way they do it is if a government subsidizes a private company in order to build something, that's unfair trade. And so what needs to happen is it needs to be totally fair, or America, like I've said, I'm not trying to be cute. I don't mean anything against the people in Africa. It's just they don't produce anything. I mean, they produce raw goods, but they don't take the raw goods and make much. And you don't see plants going, hey, I'm going to go open up a plant in Uganda. I've been to Uganda. I've been to Kampala. I've been to Entebbe. I've been into the bush. I've seen Idi Amin's tanks. Not while they were firing, but I've seen them. They don't manufacture, and it's not a very developed place. I mean, some places are more developed, but that's more services. So, we have about 2.5 minutes, and so what's the concern with tariffs? People are scared about inflation. If you're so scared of inflation, did you really bellyache when Biden had us at inflation of 20%? You say, Alan, CPI was never at 20%, right? But did you look at your grocery bill? Did you look at your insurance bill? Did you look at your at your expenses? Did they go up 20%? Yes. I think the CPI got up to 9? I think that's what it was. Also, there is a lack of spending, and there is job losses that possibly could occur, but that's not because of the tariffs. The anticipation of more companies bringing back, manufacturing and things to America is the key. Now, Rich, you always do a good job of this. So I'm kind of front running you because you're a great example to me. And you teach me about radio. You say, Alan, how does it apply? How does the common person use this? Because not everybody does what you do,
So come on.
Exactly. First, you've got to have a process. You've got to have a process of why you buy something and why you sell it. If your advisor does not have a process that they can communicate, you need to find another advisor. And you need to have a process that you're comfortable with. Number 2, you need to decide, have you heard about new radio ad? You need to decide if you want to stay on the tracks of the railroad. You got to decide that. Do you have a process to get back on to the tracks once you get off? Number 3, does your advisor suggest waiting it out? The little chart that Rich and I were talking about, I've brought it up. If you miss the 10 worst and the 10 best days going back to 1930, your returns are significantly higher than just riding it out. And it sounds like if they just say wait it out, they don't have a process. And then finally, my advisor thinks this will be it. My question is, how does your advisor know that this is it, that this downturn is going to be it? So folks, give me a call. I want to help you achieve the purpose and plan for your life, and I don't want to see you lose 20, 30, 40, 50% of your portfolio. Give me a call, 434-316-0246. Hope you have a blessed weekend, or go to my website, servuscm.com.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.